Today, Ether's losses pile up as the cryptocurrency adds to its weekend sell-off. Prosecutors argue Sam Bankman-Fried should be sentenced to as many as 50 years in prison. And Jason Urban, global head of trading at Galaxy, reacts to Bitcoin's retreat from new all-time highs. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Bitcoin continuing to move lower to kick off the week. As of noon Eastern, Bitcoin dropped further below $70,000 to the $67,000 level, adding to a retreat that started on Friday. And Ether fell nearly 3% to $3,500. Solana, however, jumped more than 4%, trading above $200 for the first time since November 2021, thanks in part to growing excitement and trading around meme tokens listed on the platform. Okay, let's talk about the top stories. Standard Chartered thinks the excitement around Bitcoin ETFs and recent highs could drive Bitcoin to $150,000 by the end of the year. The bank's analyst, Jeff Kendrick, said in a note Monday that he's raising the bank's estimates for the cryptocurrency from $100,000 thanks to, quote, more rapid pass-through from ETF inflows to the BTC price to date. He went even further, saying that Bitcoin could hit $200,000 by the end of 2025. Now, Standard Chartered isn't the first to predict 200K Bitcoin on the horizon. Our very first guest on the show ever, Tom Leofonstrat, predicted 200K Bitcoin by the end of 2022. Of course, that was before the collapse of Terra Luna and FTX. More recently, Lee forecasted that we would see $150,000 Bitcoin within the next 12 to 18 months. Next, prosecutors say Sam Bankman-Fried should face 40 to 50 years in prison. In a Friday court filing, U.S. attorneys for the Southern District of New York said that sentence is necessary given the multi-billion-dollar fraud perpetrated by the former head of FTX. For context, that's less than half of the 110-year maximum SBF could face. Still, prosecutors said that their suggested sentence is appropriate given the extraordinary dimensions of his crimes. Bankman-Fried faces sentencing on March 28th and can still appeal his conviction. Last, Starbucks is giving up on its NFT rewards program. On Friday, the company announced it was ending Starbucks Odyssey beta, saying it, quote, must come to an end to prepare for what comes next. As such, the program will close on March 31st, and for those who still want to trade stamps, as they're called, those will transition over to NFT platform Nifty Marketplace. Now, Starbucks launched Odyssey back in December 2022 as a way to bring Web3 technology to the coffee chain's rewards program. All right, back to markets for our main story. As Bitcoin has been retreating from new all-time highs, I spoke with Jason Urban, global head of trading at Galaxy Digital, to find out why. He also reacts to continued demand for Bitcoin ETFs and explains how Galaxy's product compares to the others trading here in the U.S. Let's start off by talking about markets. For 2 weeks, Bitcoin had been hitting fresh records, reaching an all-time high of $73,679 last Wednesday. That's according to Coinmetrics. Then on Friday, Bitcoin retreated sharply, dropping below the $70,000 level, and has been hanging out there since then, trading at the $67,000 level just before noon. So what do you think is behind the drop?
I think this is some natural consolidation. We've had quite a run. And so people have been watching the inflows to the ETF. It is certainly, one of the most successful ETF launches in history, if not the most successful. And so people are monitoring that, they're watching it. And because of that, you get people starting to game things. We've had quite a run. It's not unusual when you've had something like this to have a little bit of consolidation. And quite frankly, it's healthy. It's something that, we look at and we're confident in where we think this is going, over the next 6 months, but a little bit of retracement is okay. And so we'll see some more price discovery here. And then, hopefully it's back to the races.
So what do you think has been driving Bitcoin to new highs in recent weeks, and how much of that is attributed to the excitement surrounding spot Bitcoin ETFs?
I think a lot of it is, quite frankly. I think what's interesting, though, is you haven't seen the TradFi plumbing really take effect. And so while you have some platforms where it's out, you have others that haven't quite hit yet. There isn't an easy way for some of these, traditional retail investors to manifest their view in crypto. And so, in Bitcoin specifically. And so you see some speculative, players stepping in. While they're traditional finance speculators, there are people that are stepping in. And it's not unusual, when that's happening, fast money in, fast money out, but you're going to have this steady flow. You're going to have a steady flow as the ETFs downstream really become available to a broad, set of investors.
In a note to clients today, Standard Chartered's head of digital assets research said that he's raising his year-end Bitcoin price forecast by 50% to $150,000, given the quote, more rapid pass through from ETF inflows to the BTC price to date. Do you think that is a realistic forecast? Earlier this month, your CEO, Mike Novogratz, said that he anticipates Bitcoin will reach $100,000 this year because of runaway momentum in spot Bitcoin ETF. So what's your outlook?
I'm going to split the baby and play the diplomat and say it's somewhere in the middle. I certainly think that 100 is expected by a lot of, I'll say, crypto natives. As I'm out here at the Digital Asset Summit in London this week, and just talking to a lot of the crypto natives, there really is an underpinning. And then you have a lot of traditional finance players stepping in as well. And so I don't think 100 is off the table. I certainly hope 150 is the right number, but it's how we get there too that's important, right? We don't want it to, you need healthy price discovery, healthy market action. And so a little bit of a retracement here off of the 73,000 highs. I think you're going to see a steady build. It'll build a base in here and then all of a sudden start to really drive higher. So I'll play the diplomat and say 120, 125.
Interesting. Now, since launching in January, the new Bitcoin ETFs have pulled in billions of dollars from investors, even with the Grayscale Bitcoin Trust seeing heavy outflows. Galaxy is one of 11 asset managers that got the green light from the SEC to offer a spot Bitcoin ETF back in January. Now, BTCO, the Invesco Galaxy Bitcoin ETF, has $357 million of assets under management as of today, compared to BlackRock, for example, which has nearly $16 billion, according to FactSet. So how would you say your ETF is faring compared to your competitors?
I think that you have to look, when you're looking at the Bitcoin ETF, you're going to have to look at, it's a long game. There's things like tracking error that, I think that we're excellent at, and that will become, more apparent in time. And so right now, it is a marathon. While it might be a sprint marathon, it's still a marathon. And I think that as the Invesco Galaxy partnership starts to press forward, you should see us pick up pace and really gain traction in some of the places that we haven't to date yet.
Now, Galaxy Digital and Invesco jointly filed an application for a spot Ether ETF. The next filing is first in line for a decision on May 23rd, and other asset managers filed applications, including BlackRock and Grayscale. Are you optimistic these applications will get approved? And if they do, what will change for crypto?
I think that right now the regulators, and I'm not speaking to the regulators, but just the sense of the feel that we get, the regulators want to see how this works. And I don't think there's going to be a mad rush to launch. As much as I would love for them to launch an ETF, I don't see that happening in the next 6 to 8 weeks, right? I do think that with time, and the success of the Bitcoin ETF, you will naturally see something with ETH, but I think it's going to be a little bit more of a longer slog than what people would like it to be and say it's a fast follow. It might be a few more months. It might take a little bit longer.
So in a nutshell, what would you say is the current state of crypto trading?
I think that right now it's exceedingly healthy, and I'll say that not just talking our own book, but Galaxy, we bridge both sides of the ecosystem, and we are seeing an equal amount of drive and desire to access the markets from our crypto natives, as well as traditional finance players, people that were on the sidelines for the better part of the last 18 months during crypto winter. We're now seeing them step forward, entering into large transactions And when those type of players move, they're dipping their toe is a large transaction in crypto, and we're seeing them dip their toes and maybe up to the knee a little bit. So they're really kind of stepping in, and that's exciting to see, because it's healthy to have a wide range of people, some who are, entering into the market from, the true believers as well as the new converts, if you will.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.